Okay, so you hear it on the news all the time, right? The Fed is cutting interest rates. And your first thought is probably, awesome, my mortgage payment is about to get cheaper. But is that really how it works? Let's break down what's really going on with interest rates so you can see the whole picture. I mean, this is the question. It's the one we all have. We hear the Federal Reserve is making a move, and we immediately think about our biggest expense, our home loan. It just feels like it should be a simple cause and effect. But believe it or not, the answer is not always. Sometimes it's a flat-out no. See, the interest rate you hear about on the news and the rate you actually get for a home loan, they're two completely different animals, and they're influenced by very different forces in the economy. All right, let's dive into this. To really get why they don't always move in lockstep, we have to first understand what these two rates actually are. This is the foundation for everything else. So the big one, the one that makes all the headlines, is the federal funds rate. Now, this isn't a rate for you or me. This is the rate banks charge each other for super short-term loans. And when I say short-term, I mean overnight. This coach analogy is perfect. The Fed isn't actually in the game lending the money itself. It's just setting the rules of the game for the big banks. The whole point is to make sure there's enough cash flowing through the financial system so everything can run smoothly from one day to the next. And to put a real number on it, at the time we're recording this, that rate is floating between 3.75 and 4%. You should think of this number as the baseline cost of money. It basically sets the overall climate for borrowing across the entire economy. And this table just spells it out perfectly. The Fed rate, that's about giant banks making overnight loans. A mortgage, that's about you, a person, getting a loan for decades, 15 or even 30 years. They're just operating on completely different planets when it comes to time and scale. So, if the Fed rate isn't the one pulling the strings on your mortgage, then what is? Well, it turns out your mortgage rate is paying way more attention to three other major economic forces. Yep, these are the big three. A specific government bond, the general vibe that investors have about the future, and what everyone thinks prices are going to do down the road. First up is the 10-year Treasury Yield. All this is, really, is the interest rate the U.S. government pays when it borrows money for 10 years. And because that's seen as one of the safest long-term investments on the planet, lenders use it as a benchmark. So if the government has to pay more to borrow, you can bet you will too. Next, you've got investor confidence, which is basically the market's collective mood. If investors are feeling nervous or worried about the economy, lending money for 30 years suddenly looks a lot riskier. And to make up for that risk, they're going to demand a higher interest rate on everything, and that includes mortgages. And finally, there are inflation expectations. Now, this isn't about inflation today, it's about what investors think it's going to be over the next 30 years. Think about it. If a lender thinks the money you pay them back in 20 years will buy way less stuff, they're going to charge you a higher interest rate right now to protect themselves from that loss. Okay, I know that was a lot of different forces pulling in different directions. So let's tie it all together with the super simple analogy that will make this all click. Just imagine the federal funds rate is the weather outside. Is it sunny? Is it cold? Is it stormy? It's the broad general environment. It definitely affects things, but it's not the whole story. This is the key difference. The Fed rate is like that weather outside. It sets the general climate for borrowing. But your mortgage rate, that's the temperature inside your house. It's what you actually feel, and it's controlled by a whole lot more than just what's happening outdoors. So, the temperature inside your house depends on things like your insulation, that's the safe and steady 10-year treasury. It depends on your windows, which can let in a draft of bad news, that's investor confidence. It depends on how hard your AC has to work against the heat, those are inflation expectations. And maybe most importantly, it depends on where you set your personal thermostat, which is your own financial health. So the crucial takeaway here is understanding how all these big, abstract economic ideas actually translate into the rate that a lender is going to offer you. And this quote is so important to remember. When you see a headline about the average mortgage rate, just think of it as a billboard on the highway. It's designed to grab your attention, sure, but it is not a guaranteed price tag for you. Because your personal rate, the one that actually hits your wallet, is a custom blend based entirely on you. Lenders are looking at your credit score, your income, your debt, your down payment, even the kind of loan you're getting. All of these things together make up that thermostat that you have the most control over. So, if you want to become your own analyst, here's a quick checklist. First, check the Fed rate to get the general climate. Then, look at the advertised mortgage averages for a baseline. After that, look up the 10-year Treasury yield. That's a huge one. Then, just scan the news for inflation trends. That gives you a pretty good snapshot before you even talk to anyone. But really, after all that homework, the absolute smartest thing you can do is just talk to a real lender. They're the translators. They take all this big picture economic weather and connect it directly to your personal thermostat to give you the one number that actually matters to you.
So the next time you see that big headline about interest rates, you'll know the real story is so much deeper. You'll know to ask yourself, okay, but what's the 10-year Treasury doing? What's the mood of the market? And most importantly, how does all this weather outside actually affect the temperature inside my house? Now, you've got the tools to look right past the headline and see what's really going on.